Okay, this is one, which is a sample P&L. It's a real simple revenue, expenses. You see the uh, you see the merchandise, the revenue, the expenses, the net income. All of that is giving you a profit bottom line. It's just simple, straightforward P&L. You will do it a little bit different for your business because you will have what we call cost of goods sold, which is the portion right here. You will break that down in more detail, okay? But that's a simple, straight way of looking at the profit and loss, okay? Gross margin. Again, this is an essential piece of business number for your business model. It requires you cost out, making sure what you're selling. You want to make sure that all your ingredients, all of your uh, labor, material, all of that, is included in it before you go and price. Pricing becomes a very essential. Well, we all know where we can price it at X amount of times, but you really need to actually do the actual math to kind of make sure that you are doing the proper breakdown. And the way we do it is you look at it, the sales minus the cost of goods sold. If you remember, we went back here, you will break this one down, the cost of goods sold, and then the next one is obviously the gross margin, and then you have your expenses, which is your rent, insurance, all of the overhead that goes with it, okay? But this is a very key point we will be using when we move forward to the budget and projections. The next one is obviously the cash flow statement. The cash flow statement is just the movement of money between your P&L and your balance sheet. Those are the money, and the ones who were with me last time will understand there are three basic statements. You have the P&L, balance sheet, and cash flow. The cash flow statement tells us how was the money moved. Where was the money moved? Was it to net income? This is how much it came from net income. Where the money was spent, how much is in accounts payable was paid, all of the way. So it tells you how your money was moving. This is essential because it tells you how your cash was spent. And if you're spending it unnecessarily or unwisely or not managing it right, it will pop up in here. Okay, this is where you will track it. Obviously, the balance sheet is one of them. Tax returns usually have the profit and loss, and balance sheet, they do not do anything on the statement of cash flow because it doesn't matter how the money was moved. This is the two statement that your accountant and everybody in the professional, finance professional tend to look. When you go for loans or you go for financial assistance, they will look at your cash flow. They want to see how you're making the movements. And whether you give it to me or not as a lender, I will be able to break it up. I can get it from these two statements, which is a P&L and the balance sheet, okay? So it's just basically saying the cash, prepaid rent, inventory, all of those things that are what you owe. This is what the business owns. This is what the business owes, and this is what the business is really, personally owned. That's the equity part. So having said that, and we covered that in the last one, so I didn't want to go too much, but I wanted to just give you a quick reminder on those three.